We're delighted to welcome Dr. Raghuram Rajan, Chief Economic Advisor, joins us live and exclusive right here on ET Now. Dr. Rajan, I know it's been a really busy day for you. Thank you so much for joining us on ET Now. Firstly, 4.8% fiscal deficit target for FY14. There hasn't been any big bang expenditure cuts. How confident are you of achieving that target? Because we are heading into an election year and there is likely to be fiscal slippage.
Well, I think you should look at the fact that there's been very careful expenditure management during this year, and as a result, we haven't also announced any big bang expenditure increases for the coming fiscal year. So, I mean, there's been a fair amount of conservatism built into this budget. It's obviously, I mean, one can speculate as to what might happen over the year, but I think the intent is very firmly to stay to the 4.8%.
Raghu, may I ask, what are your assumptions on oil prices and exchange rates? Because, I mean, these are two things which could change the whole balance.
Well, oil prices, the broad assumption is that it stays in the 110 region. And of course, exchange rates, I think the best predictor of exchange rates is pretty much where it is now. You are right in the sense that if oil prices take off, and go into the stratosphere, it will have an adverse effect on any budget. Yes. But the intent, or the hope, I should say rather, is that currently with a fair amount of spare capacity in Saudi Arabia, and the intent amongst the oil producers to manage the oil price so that it doesn't deviate sharply on either side, the hope is that over the year it stays range-bound in the 110-120 range, in which case the projections on oil subsidies are reasonable. The other thing to note is that we do project a fair amount of decline in those oil subsidies as we pass through higher prices to the consumer.
So by when do you think that the diesel subsidy will finally get phased out with these gradual increases? And at the end of it all, will there be a lump sum diesel subsidy that continues as the Kirat Parekh committee and others suggested, or will we basically just be phasing the diesel subsidy out altogether?
Well, as of now, the intent is to keep, the oil marketing companies have the flexibility to raise that price at a steady rate, and I think there is. We have to wait and see, as the previous question suggested. We have to wait and see how the extent of the subsidy develops over time. And whether there's a need for more or less, but at this point, this is the structure in place, and we have to let it develop. After all, we've just had a couple of months of increases.
But Dr. Rajan, do stay with us because we've got the biggest lineup of thought leaders, industry leaders, and market experts joining us right here in ET Now. All of them have some questions for you. Punita Kumar Sinha joins in live as well. She's got a question for you. Punita.
Hi, Raghu. Yesterday in your economic survey, you said that the budget needs a little bit of a lot. So, and that's what the budget really is delivered, a lot of little measures on a lot of things. Now I want you to put on your hat as your IMF chief economist, which you've been in the past. Looking from that vantage point, if you had to look at the budget, would you say there had to be a lot of political compromises, or you think the IMF chief economist would have looked at it very favorably?
Well, it's hard to put myself back 10 years, but I think what the finance minister had in mind was first to get government finances in order. If domestic investors, international investors believe the government has its finances in order, in some sense that gives the best environment both for investments to take place as well as savings to take place. And clearly, as a country, we need more investment and more savings, again, as he said in the speech. So my sense is that was the primary objective of this budget. If we had a ton of money available, we could have given lots of savings incentives, lots of investment incentives, But clearly, in times like these, every rupee counts, and we have to be as conservative as possible. Within that conservative sort of envelope, I think we have still managed to eke out incentives to push activity in the right direction. And so hopefully, when people see both the extent to which we have been conservative on the fiscal side and have created a roadmap for fiscal stability and fiscal consolidation for the government's finances, but at the same time see that we've nudged in certain directions, nudged in the direction of structural reforms in a variety of places, but also in the direction of incentives, temporary but strong incentives to move activity, for example, the investment allowance or the incentive given to home purchases, that we move it in the right direction.
Yeah, Raghu, I think firstly, my compliments to the Finance Ministry. I think this is a budget that was very difficult to balance out, but it's been balanced. My point is very simply on the current account deficit, because typically you would expect that the fiscal measures taken would also have an impact on the current account deficit, that is the tightening of the fiscal deficit. What do you see as playing out in the coming year on the current account side? And does the government have some more thoughts outside the budget to address this?
Well, that's a great question, because I think the current account deficit is something that we clearly worry about. I think the key issue is, even as we increase investment, we have to increase savings to finance that investment. That's just the macroeconomic identity. Where do we get these savings from? Clearly, more government saving has to be part of the answer, and the budget is a step towards that. But the other part, which is critical, is to get households to move away from gold as an investment, for example, or structures, but towards financial investments, get their savings up in that way. I think lower inflation over the year, if that is the outcome of the variety of steps that the RBI has taken of greater food production and so on, will help tremendously in making fixed income investments look a lot more attractive, especially as investors realize the value of holding longer term bonds in an environment of falling interest rates. But I am also hopeful that some of these new investments, new instruments we are talking about, perhaps the attractiveness of getting into the stock market for first-time investors through the Rajiv Gandhi scheme, or perhaps the inflation bonds, which we have to make investor-friendly, so that people can go to their bank or go to the local post office and buy an inflation index certificate. Perhaps that will also attract funds away from these real investments to financial investments. But that is something we have to work on over the year. And of course, if we can expand exports on the back of stronger growth in industrial countries as well as many of the emerging markets, that will help reduce the current account deficit. No magic bullets here, but just we have to work very hard on reducing it, but also work very hard on making sure it's financed in a safe and responsible way that is more FDI, more rupee FII, and perhaps reduce the reliance on foreign exchange borrowing.
Right. It doesn't get bigger than this. Chief Economic Advisor Raghuram Rajan, KV Kamath, Uday Kotak, all of us, all of them right here on ET Now. I have one question for Mr. Kotak, because I know Mr. Kotak also has a question for Raghuram Rajan. Mr. Kotak, firstly, we do know that the divestment target for FY14 has been set at 40,000 crores. Do you think that's realistic? Do you think there's appetite for so much PSU paper?
Yes, I think divestment targets are achievable. And I do give, first of all, my compliments to Raghu for getting focused back on financial savings. In the last few years, most Indians had moved away from financial savings into gold and real estate. And therefore, a policy focus on that is very welcome. Raghu, having said that, do you think, and there have been a lot of measures I saw in this budget which encourage that, and there are a series of small measures on that, including encouraging alternate investments, securitization, capital markets, mutual funds, and insurance. Do you think, Raghu, we get away from India's penchant for gold through these measures, and do you think they are enough for making it happen?
I think the idea, and this is going to be work in progress over the year, the idea is not to stop with the measures that have been announced in the budget, but to continue working over the year on how do we deepen our financial markets, how do we broaden them to reach every Indian in a way that will, well, in the short run, help draw them away from instruments like gold, but also in the longer run provide them a good avenue for savings, for pensions, for insurance and so on. So my sense is the budget is sort of a down payment. The finance minister wants to work on deepening, strengthening the financial sector, and more will be done over the year to improve. So see this as a first step rather than the last step.
One of the top tax experts, Deputy CEO of KPMG, also is with us in the panel, and he's got a question for Dr. Rajan as well. Mr. Kanabar.
The question I have for you is, we spoke about infrastructure and the statement that it needs $1 trillion of investment, etc., etc. And one has seen two sets of specific proposals to boost infrastructure. One is the tax-free bonds and the amounts which are proposed to be raised in that regard. And the other is the extension of tax holiday for power generation. Do you think this is sufficient really to kickstart this sector? Because this is one segment which in the last 2-3 years has gone down so significantly that it really needs a severe dosage of investment and a severe dosage of kickstart to make it go ahead.
For infrastructure first is to, on the real side, to get the projects that are stalled restarted, remove some of the the difficulties in getting clearances, in getting linkages and so on. And as one of your participants, Prashant, mentioned, a lot of this lies outside the budget, lies with the efficient operation of something like the Cabinet Committee on Investment. This is something that's ongoing. Again, I think it's of critical importance to infrastructure, but this is outside the budget. Inside the budget, I think apart from the proposals you mentioned, there's also a lot of work on developing these infrastructure debt funds, for example, both the NBFC as well as the mutual fund versions of it, of facilitating investment in infrastructure by foreign institutional investors. In fact, trying to reduce the barriers in many ways for FIIs to come into the country. We believe that foreign investor investment in rupee instruments is a fairly safe form of investment. If we can attract more of them to it, it'll be very useful both for infrastructure as well as incidentally funding our current account deficit. So I think that there are a lot of proposals on the financing side. On the idea that perhaps what we need to do is a major new project, well, clearly there is a major new project on the way, which is the Delhi-Mumbai Industrial Corridor, a massive $90 billion project, which is now starting to roll out. So that's one big project. But if you are thinking about some new project announcement, there were some of those, but it's very hard to get something started up from ground zero in a short span of time. So if you think about a new infrastructure project which is announced today, it'll probably be 5 years by the time it actually comes on steam. So in a time where growth is of essence, it's more the existing projects that you want to facilitate, financing for projects that are already proposed and thought out, which you want to facilitate. But new projects are going to be of limited value at this time.
Raghu, I looked at the divestment targets that you all have put out, and divestment targets are obviously a necessary way to garner revenues, but it's not a secular, sustainable way to continuously keep getting revenues year after year. And after a point, you won't really have that source of revenue. So I noticed that the surcharge you put on the ultra-rich is only for a year. Can you explain why it's only been put for a year and it's not something that might sustain?
Well, the idea was that we have a tax regime which has stood the test of time for governments and for finance ministers, I think is what the FM said in his speech. And the idea is that part of what we want to do is continue the stability of the tax regime so that people understand what to expect going forward. And so the three slabs, the 10, 20, 30 is something we want to stay with. which is why the surcharge is a one-time surcharge. We don't want to, I mean, we do believe that broadening the base is the primary way you get more taxes. But in a time of difficulty, perhaps it's a reasonable thing to ask those who are very rich to pay a little more, but we don't want to target them in some sense we don't want to soak the rich policy, if you will. The idea is a temporary tax and then go back to the structure that has stood the test of time, rather than implement yet another slab for the super rich. So that's really the intent, to suggest that there is stability in the tax structure. We don't want to move away from the existing tax structure, and we plan to return to it so that investors and as well as citizens have confidence in the overall tax regime.
Do you see this as a plan which will then lead us to a tighter fiscal deficit for the year after? Is that what is being planned at this point in time?
Well, I think as we see growth recovering, it will make it easier to achieve tighter targets. Obviously, the roadmap is to get down to 4.2 the year after. But I think if we can increase the tax buoyancy as a result of stronger growth, we can, it'll become easier because of higher revenues to maintain or to achieve those targets without substantial cuts. So going forward, I'm hopeful that if we achieve the key mission of restoring growth, things will become easier rather than more difficult in our effort at fiscal consolidation.
Raghu, I have one final question. The transfer pricing issue. We have a situation where we thought transfer pricing would apply to goods and services. Now that's being applied to capital transactions. Shell was suddenly hit with a demand of 15,000 crores, saying that, you are underpricing the share value at which new shares are being issued. And people are saying this is a kind of tax on FDI. This appears to send out a negative message. How are you going to sort this out? And why are we having transfer pricing applied to capital transactions at all?
Right. I think the whole area of transfer pricing we need to look at very carefully, and the intent is to develop clear, bright rules that people can understand and not have more of these to use the, more of these problems with respect to both foreign and domestic investors. But that's, again, work in progress, that we need to develop lines, clear lines on transfer pricing, and that's something, again, that will roll out over the year as we work through various reports that are with the government and we specify those clear lines. But yes, this is an issue that we are aware of, and we are trying to do something about it.